market is bullish, of course we know it is making higher highs, higher lows. Each of the highs is making is breaking the previous high, and this area where price has broken a previous high is called, this high that the market broke here is called the resistance level. Alright, let me label it to what? R. Alright, that is the resistance level, R. And we also came to the conclusion and agreement that price usually comes back to retest this resistance level it broke in the past. That is the assumption that make us forex traders to consider these resistance levels or these areas as places where we should be looking for buying and selling. That is as point of interest. Now what we normally do is we mark out this resistance level and extend it to the future. And extending to the future, we know that when price breaks the resistance level automatically becomes a support. Right, so it becomes a support. That is it here, support level. Right now, and the principle is that price usually more often than not comes back to retest this resistance level before it continues going up. And if it comes and it retests this resistance level, turning it to support, and you see candlestick confirmation or chart pattern confirmation here like double bottom or maybe break of structure around this place in a lower time frame, you can stand the chance of making money if you trade it consistently with proper risk management. Right, that is the concept of support and resistance. And support is this area where we look for buy, and in a downtrending market the opposite becomes the case. We are looking for a sell in a resistance level. This concept is very simple, and yet it still produces positive results in the forex market. Now in a downtrending market, the market does this lower low, lower high, and then makes this type of move. And a forex trader will tell you that this area here is actually a support level. I will label it with S, which is support. And we know that when price breaks support level, the support level eventually could possibly turn to resistance. You will extend it to the future. This place is a point of interest, a point where we are interested in. Why? Because it is a place where market has reacted on this zone in the past, and if it comes back to this zone, there will be a possible reaction. Right, that is the concept behind marking out areas of value or points of interest. So price, we are waiting for price to eventually come back to retest this support that it broke in the past. And if it comes here and gives us reaction, it could be rejection candle with wicks to the upside, it could be engulfing candle, it could be chart pattern like M pattern, double top, or any break of structure towards this area. You can still look for sell, expecting price to make this move, and will make money. So that is how simple it is in the textbook version of trading the forex market. Remember, we are still going to go to the chart to see it playing out in real time. So moving away from there, I also mentioned that the next point of interest, because we want